Yeah. Martin, how does the details of today's CPI print impact how you would allocate globally in inflation-linked securities?
That's a good question. We have felt for a while that the path of inflation priced by the U.S. inflation market is inappropriate. You know, when you look along the inflation curve, we see CPI at roughly a 2% level for as far as the eye can see. We do think that the risk premium around that should probably be biased higher all along the curve. So when we have global mandates, we like to own U.S. inflation, both outright and on a cross-market basis. We think there are pockets of the global inflation landscape that are overvalued. You know, in particular, the UK, we think the path of inflation priced by the market is currently a little in excess of where we deem the path of inflation to be in the UK for the next 12 months.
Yeah, that's interesting about the UK. I'm wondering about the Eurozone as well. Are the inflation risks in the Eurozone more actually to the downside than the upside?
I wouldn't say they're tilted in one direction in particular, but when we do look across our global dashboard of indicators, we think that the path of inflation in Europe, at least for this next 6 to 12 months, is probably going to be pretty boring or pretty much on top of where we are right now.
Can I just point our viewers to chart 9420 on our Bloomberg chart library? You were talking a moment ago about real yields, Martin, and it turns out that, you know, the US is obviously the only one that's in positive territory. We've seen a 60 basis point rise or so for really all of the major economies, Germany, the UK, Japan and the US. Where does that real yield go? What's a correct real yield for the health of the US economy?
Well, I tend to believe that long-term real yields are a great proxy for potential growth. And what we've seen in this cycle, particularly in the aftermath of the crisis, is long real yields have been driven lower. One would argue by a lower potential growth rate. I'm of the opinion that long real rates have been driven lower by the policy implementation from central banks around the world.